So thank you to everyone for joining us for this last panel. We're going to go out with a bang, need some serious energy on the stage, and then we'll have a bit of a wrap-up discussion and get on to the very important job of drinks at the end of the day. This session was on how is innovation driving growth and competition here in Bermuda. Obviously, Bermuda's earned its status as a hub for innovation on insurance-linked securities and other new structures for offloading risks. But today, there's new technologies like AI that we're going to talk about a bit about, are poised to change the way the insurance sector works. We've also had a kind of new wave of insurtechs that are trying to do old business lines in new ways. Where will the next breed of innovations come from? That's what we want to dig into today, and maybe get some practical ideas about how to foster innovation and get beyond kind of buzzwords. So joining me to discuss some of those questions, we have Kathleen Faries at the end, CEO at Artex Capital Solutions. She's an industry leader with 30 years of experience in reinsurance and ILS markets. Next to her, we have Hendrick, CEO at specialty reinsurance group Vantage, and previously Chief Executive at Excel. And we have here Steve Horton, President of Liberty Mutual Bermuda, responsible for running all Liberty Bermuda businesses here on the island. Thank you all for joining me. Kathleen, maybe I'll start with you at the end there. I want to get your thoughts on conditions for innovation right now. What we've seen is a tightening of investment conditions, a lot of businesses wanting to cut costs rather than invest. Obviously, for insurtechs, we've had the fintech winter, and a tough kind of funding conditions for people wanting to foster new ideas. Yeah. How would you say right now is for trying to push new ideas through established organizations?
Well, I think we've heard a lot about market dislocation. We've heard a lot of discussion about the market in general. So those kinds of dynamics, I think, are great for innovation. And I think Laura even said it. She'd love to see more innovation.
Yeah.
Right? So, so I think maybe to level set us right away, right off the bat, there's a couple of different types of innovation, I think. Maybe somebody disagrees, but there's sort of sustaining innovation, which would be improving all the things that we already do, services, products, just doing them better. And then there's disruptive innovation. And when I really started thinking about that, I thought, wow, we've had a lot of sustaining innovation. A lot of the insurtech activity that we've seen over the years has helped tremendously around the claims process and how we collect data and what data we collect. I could go on and on. But when I really started thinking about the disruptive part of that, and I thought back, and I think it might have even been this event, might have been 9 or 10 years ago. And of course, at that point, I was really excited about innovation. I thought, oh my gosh, Google's going to come in. It's going to be exciting. They're going to do things. They're going to really disrupt the whole market. I was younger. And there is a little bit of arrogance sometimes around innovation, right? And maybe that's what fuels it, which is great. We need that. But I remember listening to a panel, and I've been going back and forth on whether or not I should say the name. But anyway, this CEO was a CEO panel, very prominent in the market, very prominent in Bermuda. I think everybody knows who it might be. Anyway, and I'm listening to this, and they start to talk about innovation. And he was like, well, I don't know. I'm not sure. I think there is going to be that kind of disruption. And the thing that he said, and this is kind of where I think a theme for me is, innovation is great, and all the things, and we're going to talk about AI, that's all great, but there is something to experience, wisdom, knowledge, that you almost have to overlay on that. And so what this person said was, you know what, I think probably what Google and maybe others don't really get is that relationships really do matter. And I think they haven't really appreciated how important relationships are in this industry. And I thought, relationships, I don't know. If we have the tech, I don't know, it's going to get. But he was adamant, and I think he was right. I think it's very hard. It's a very complex business that we've built up, the ecosystem, there's complexity, there's regulation. But I think this concept, and I think this is going to become important as we sort of get into this AI world. When we think about what AI is and what AI isn't, there is a human element to all of this that AI is not going to give you,
Okay,
right?
let's maybe hit AI next. Greg, I saw you nodding at some of that stuff earlier. I mean, if you want to respond to any of those remarks, and maybe highlight any area of innovation that you think particularly interesting at the moment.
Well, I just want to build on what Kathleen, I'm still trying to, I'm half distracted trying to guess exactly who that was. So I'm hoping it wasn't. I'm hoping it wasn't me. So, although I wouldn't have been a CEO back then. So I'll just build on what Kathleen said. It's still definitely a people business. And now everything I'm going to talk about is from the background of what we do at Vantage, which is specialty insurance. So large corporate customers and reinsurance. So we're not trying to sell to consumers. We're not trying to sell to small businesses. It is and will remain a people business. And I think that's mainly because most of what we deal in doesn't have data sets that are large enough to be credible in actuarial lingo. And so you have to bring in a human overlay to make sure the model isn't taking you in one direction too far, too wrong. I think this is exactly the best time to be innovating. Absolutely the best time to be innovating. The world is such a riskier place, and that change and pace of risk continues to accelerate. And we set up Vantage, and I think everybody would say kind of the same similar pillars if they were doing it from scratch again. Talent's number one. Our number one asset is our people. Number two is the technology. For us, it's all about we can build from scratch in the cloud, and our data, which is our second most important asset, is set up in a way where I don't have to spend, our teams don't have to spend 18 months scrubbing data. We build models in like 4 or 6 months. So we were able to accelerate because the technology has gotten so good, right? It's so much better now than it is today. And then the last thing is this piece about this never ending, well, we've invented everything in insurance, and so you're not going to invent anything new. I don't believe that. I think there's a lot of curiosity and creativity in the business. I think one of the impediments that doesn't get talked about enough is effectively human beings don't really want to talk about insurance. Who in the room wakes up on Saturday morning and shops for insurance? What do? Shoes, travel, cars, everything else, not insurance. Because we don't want to talk about our mortality. We don't want to talk about us dying. We don't want to talk about our homes burning down. All of us as humans then go out in corporations and insurance companies and buy protection, and we bring that same mentality to it. So there is a huge bar to get over to innovate because it's a product that nobody at its core really wants to talk about. And it's our job as an industry to do a much better job about explaining why it's good to talk about insurance, that you make people whole again after something has befallen them. So that's to me is one of the biggest impediments on innovation is that I just don't want to talk about insurance.
Steve, want to pick up on that?
Yeah. There's a reality check here, isn't there? You know, we've got a performance gap, which sort of impacts, you know, where our losses are coming in, our expenses, we have inefficiency, we have an inflationary environment that has gone through the roof, interest rates have followed, significant unrealized gains, therefore on the balance sheet. I mean, that is the prime time to be trying to rethink about the model, rethink how we come to market. I completely agree with your point. It remains a relationship industry, but everything that's around that or in between that can be upgraded. And so, I mean, history has shown that when a high inflationary market, that's when you get the technology advancements coming because you have to, because of the inefficiency of the way in which we deploy capital. So I'm actually really excited about what's coming next. We've seen the emergence through, you know, from the internet to the good old BlackBerry and the way in which we communicate and that connectivity with clients. You sort of overlay that with AI, and that really gets exciting. And I think because it's become popular much quicker, I think, than what we saw with the internet, et cetera, you're going to see the use cases come to the forefront much quicker, you know, for the market as well. So that's both on the client side, to Greg's point, of interest and intrigue. I think when we did a client summit recently, what they really wanted was more input from us, not just a renewal cycle meeting and discussion, which in Bermuda is phenomenal because we get to do that face to face. They want much more, and part of that is being able to share our data and our insights. So I think this is a cracking time to be in insurance. It's what I think about on a Saturday morning sometimes, not maybe buying it, but what's coming next on the innovation side. The biggest problem we have, when anyone uses the word AI, it's so broad. Yeah. And so we have to really distinguish what are the use cases of that and how that's actually going to really impact that performance gap.
Well, let's drill down a little bit, to use the cliche, into AI. Obviously we've seen it changing lots of different parts of the insurance sector, whether that be like motor claims, where it's had to make a lot of inroads, customer communications, chatbots, underwriting, maybe not as deep, but there are some really interesting stuff, like in the follow market in London, and generally on the life business, we're seeing AI being used. So there are lots of different pieces of it. Is there any particular application of AI to insurance that you think is really interesting at the moment, one that you think is going to be important over the next few years? Maybe start back with you, Steve.
Yeah, I think to Greg's point about our data that we all hold dear, the lack of structure has been an issue, but AI sort of can assist in normalizing that to a degree, which therefore would mean, if I'll give you a scenario, if you have a profitable line of business and you know why it's profitable in terms of what the key risk factors were and your decision process, i.e., it was approved, it was declined, whatever, you're able to regression test that now and be able to come to a sort of a decision point based on those past decisions if this is likely to be a risk. So what excites me with that concept is removing some of the subjectiveness of the decision-making process. And I think that leads to just greater performance overall. That's sort of one. Secondarily, if you're able to combine all this data or use artificial intelligence to do that for you and distill it into a single page of review, rather than all those hours we take with emails and internet search, et cetera, and we boil that down to a single page, the speed at which we can come to a decision will be much quicker. And so you've removed subjectiveness from that decision, and you've got much greater data. You go one step further, and you say, I can review my decisions and what else was going on in the world at that time. How would that have impacted that decision? I.e., the money supply had stopped, and I was looking at writing banks. Should I have used that as an indicator? I can then bring that into my underwriting process really quickly. So there's an efficiency.
But how about that risk that you build in there that, say when the AI is doing that synthesizing, that it says, oh, well, there isn't actually claims data between this 5-year period. I'll just make it up, like I made up those US court cases in that recent example, right? That it just hallucinates, fills those gaps, yep. And then you're making an underwriting decision based on something that is, not true, or simulation.
Yeah, and I've done it myself. I put in one of those providers to see all the recent sort of conductive storms, and I looked at it and thought, that doesn't look quite right, and I asked the machine, and it said, no, these are fictitious. I've made it up, even though I asked for true fact. So you've got to be really careful. I think what happens there, and we've just seen ChatGPT release their latest module of GPT, which will enable you to use a large language model based on your own data. And that's going to really be a game changer once people get their heads around that.
Kathleen?
I think that's a really, and when I was thinking about this too, I thought of an analogy. So if you think about what happened with property cat models early on, and we had these models, they were a bit of a black box. It was great. I mean, they were predictive, they were giving us information that we wanted, but very quickly what happened was the likes of RenRe, TMR, others, realize that actually it's not good enough to just have this output. We have to understand how the model is giving, what the model is doing, understand the model. So they started to actually dissect that, understand it, and I think that really has to be part of what we do here with AI. I think if we just go blindly and mindlessly into using what the output is, I think we're gonna be in trouble, honestly. So I think to me it was kind of an interesting analogy, because we did do that, we did understand the models, and now, as you heard Kevin talk about, they have their own view of risk, based on those models that were built early on. So I think we have to really, be careful and go slowly and understand what's really happening there.
But let me just go back. I love that analogy. In 1992, when I was underwriting property cat risk in the United States, our submission was 3 pieces of paper. It was a paragraph or two about the company. It was a page about what they wrote in premiums by state, and it was a history of their losses. Mm-hmm. That was it. There was no exposure. What is that? What do you mean? There's values insured here? I don't even know what you're talking about. And so you're absolutely right. It's a huge change. And then what happened is we learned, and we got, as an industry, we got caught out, right? In 04, 05, there were 7 landfalling storms in Florida. The going-in assumption to 06 would there be 2 a year and there was none for a decade in Florida. But we got better and better and better, and the data got better and better. Now today we pass, as companies, whatever the biggest word is, gigabytes, terabytes, is it whatever, back and forth with each other about very detailed exposure, and we've gotten better and better. AI is going to change everything about, and I'm speaking again from specialty insurance, large corporate customers, and reinsurance. going to change everything about how we do business, everything. And you've
Give us a couple of examples.
Well, so I think of innovation, process, and product. Process you've touched on, and I'll give you a specific example, concrete. Our cyber underwriters today believe there are 14 questions that really matter, and we can debate whether they're the same 14 or the right 14, but that's what we believe we do as human beings. It takes an hour every submission to go through the 32 different types of cyber applications there are in the marketplace. A couple of the big name brokers have a franchise of being more predominant than others. We can now do that in 15. I've now saved, I haven't saved anything. Every underwriter who really does all the work at Vantage has saved 45 minutes every time they open a submission.
Yeah.
And that's tiny. I can give you, we happen to be, Carlisle is one of our major investors. They're invested in a claims handler. They take in 7.5 million health medical reports a year. They used to take 15 minutes that now take 5 seconds.
Yeah.
It's going to change everything about process. Yes, there is a decidedly, but a decidedly 100% agree. You can't just turn it on and say that's the answer. In fact, we've made a Vantage GPT, so the data stays within Vantage, it doesn't leave. But the rule is you still own that output. You don't send me an email that's written by that and I find there's 3 grammatical errors and you're calling me Gregoire instead of Gregory. Not happening. But that's really important.
Thank you,
you can't just turn it on. Yeah, you can't just turn it on. But that's right. Yeah.
Steve,
Yeah. Just was thinking about how to frame AI is the enabler function, right? It will enable us to have better conversations about how we should be looking at risk. And sort of back to first principles. At the moment, you're getting all this from all other places. Can we distill it into a single source of truth, right, in our own data, and then from a risk submission? That's a great start, and that's efficiency. The safety aspect is also important, that we don't all of a sudden jump to the sort of escalation or the movie where it's all being automated and our market's gone. I'm not for 1 second suggesting that. AI is going to be the co-pilot, and it's going to be by our sides to make those decisions and hopefully refine how we get to them and also give us insights.
Even further off into the future, because that would be my next question really, is that, if you look 10 years down the line, if the models are better making those underwriting decisions, then obviously this question has been asked at every event for the last 5 years, but I mean, it seems more urgent this year, right? Do you not think that it could replace, because the co-pilot is definitely the house view at the moment of the industry, that it will, play that kind of role? Do you not think that it could replace the underwriter even on specialty commercial?
I think it's a good thought exercise, and we've run through it several times. The way I look at it is everyone moves up the value curve. I don't see people being replaced by the machine. I think the roles change. I think underwriters, again, we're going ahead, right? So let's do 10 years. More of a portfolio manager function would be where the underwriter lands. I'm not going to go for every role and responsibility in organisation, but if you can do that, make decisions quicker, write more risks, you've got more time to do what? Be with your clients, be your brokers, and also look for what the next important thing is to be looking at from an exposure perspective or just market dynamics. We'll be more focused on our clients, in my view. The sort of analogy of it just being computers and it just running itself, there's too big a chance of hallucinations and issues there. And also, we have to then come back to what was discussed earlier in the day around cyber and hacking. And if someone gets into your own version, right, of these things, and that's what's running the house, then it's no longer your house.
I mean, we can get deeply philosophical here, and I'm not sure we're the best. Yeah. Never say never would be my first thought, which is the computer power is coming, and this is going so fast and changing so quickly. ChatGPT 40 may be the one that, we're on 4 now. It may be the one that replaces underwriters. I kind of doubt it, but what it does do, just to amplify that, to me, is our job. We created, as humankind, we create more data this year than we have in the history of mankind before. And that time is going to shrink and shrink and shrink and shrink. There are pieces of data and information about our clients that either, and I agree completely, share them with them to help them make themselves better risks or let us select risks and price risks better, that will be unlocked by being able to use AI and that we can't see now because as our human mind just can't bend that many corners. So I fundamentally agree. If we're a decade out, we still have people that I think our job is to make sure they are given the best insights to make the best decisions.
I guess and so I agree completely with all of that, and certainly speed and all the examples that you guys gave I think are really important. I guess maybe this is my role on this panel, but and there's a lot of young people in here. I have the privilege of living with a cognitive scientist. So his research was memory and learning. And so, we've had a lot of conversations so far about AI recently. And I love the way that he framed it for me, because I think these are the things, because we're going to get caught up, and it's cool. It's cool, and it's fast, and there's going to be lots of things that we can do better and more efficiently. But the thing that he said to me really resonated with me, and it's a large language model. So the model is basically got all kinds of text and words, and it's predicting, based on your prompt, what you want it to give back to you. So it's predicting and it's generating. Humans use language to express meaning, right? And so, we're picking the exact right words based on, I'm looking at Greg, he's giving me lots of body language. I kind of know Greg. I'm thinking about the relationship that I have with Greg. I'm thinking about the experience that in the past that I've had with Greg. I'm picking very specific an expression of what I'm trying to convey to Greg. AI does not do that, right? So again, I'm just giving that as an example to say why you can't take humans out of this, right? So I'm building a marketing document for somebody. That's great, and you're going to get a good first cut. It's going to be fantastic. It's going to save you time. But don't forget, AI doesn't know who's on the other end of that marketing document. And the extra bits that are going to make that valuable and going to get you the sale, right? So I just want to kind of inject that into it,
it's
right?
great, and I hope those were good memories.
Can we just?
We had some good body language.
Just one quick,
yeah.
just one real quick.
He was looking me right in the
Well, well, I try to pay. I try to listen.
Yeah.
One of the things I've read along the way, and there's a great book, Kissinger, and anyway, it doesn't matter about AI. You should find it. But Henry Kissinger's one of the three authors. Eric Schmidt's the other one. I can't remember the third one. Where is reality what we perceive it to be, or will this unlock the ability to see so much that we don't see? Because as humans, to your exact point, we process for safety, right? Our number one thing is to be safe, right? So we process so many things and go by them. Not a factor, not a factor, not a factor. Are we going to find something that actually is, well, wait a minute, reality is a little bit different than what we thought it was. So there is decidedly no one is turning on, sorry, I'm not suggesting we turn on AI and you got to own your work. Yeah.
Okay. Well, if we just earth it.
Well, you took us on this. You took us on this.
I took us on that spaceship. Could we just talk about claims? That'll bring us down to earth. Obviously, AI is being used already within claims, and there are risks there, right? And regulators around the world are looking closely at the risk of bias in AI, either patterns in the data that you're using to feed it that haven't been spotted, and that you might come up with a decision that means people from a certain protected group end up, not getting payouts more than other people. And, Lemonade got into hot water when they talked about the non-verbal cues that their AI picked up on their kind of video that their customers use to make claims. Just showed the kind of real risk in this area, right? Because it obviously elicited a lot of questions around, like, what's the AI really doing? What's the black box doing? But just, to ground it, regulators really care about this, and they're going to be pushing insurers to make sure that there isn't bias. How much of a hurdle is that to the use of AI in claims, especially, I suppose, for retail customers, but also for commercial customers, like to make sure that there's fairness there?
It's an interesting. It's an interesting question when we get to the commercial side, because I think it does hark back to the human claims adjuster still being involved. Maybe there's the use case in our sort of what we sort of deem as complex risk area to utilize AI to still put the information together, etc. But the decision point still requires the human sign-off. Now, actually, you could use AI to make sure there wasn't any of those biases being used. You can flip that case. And so I think it would, in the end, give us greater control on those safety aspects. The reality today is that it's really used in the personal line side. I think, and that was probably 18 months ago or so, I think I started to see that come to fruition. I think we're all aware of that. So from a governance perspective, when you start talking about AI, you're definitely not just going to be putting in the latest model into your business and say, yep, we're done. We've worked it all out. It's fine. That's really efficient now. you have to have a whole governance structure, which ties back to the regulator. You have to take it the same as when you're looking at underwriting a product or coming to market with something new. You have to have that governance structure.
Yeah. Any views on the claim side?
Not so much on the claim side, but I definitely want to amplify the regulatory environment in the U.S. in particular. We don't operate in the European Union, so I'm imagining it's probably just as heavy there. Is very much on this topic and very much on kind of hold up, wait a second, we got to understand what's going on better. And I completely sympathize when you're talking about consumer and so forth. We're in these lines of business where that's not, you're going to be no more or less biased using AI than you would be because of the fact that we use the data from the last 10 years to try and price what's going forward, right? They both have biases, they both have inherent difficulties. In the claims environment, I still think it's much more of a process lift than in our space than a close the claim lift, I think. So.
I agree.
Well, I think they're using it in the life space, right? I mean, I think they're basically taking that data and in some cases using that instead of actually getting,
But even if you're doing specialty commercial business and you're using AI to condense a load of claims documents and try and kind of draw out, certain learnings or bullet points from that, there's a risk, right, to any of that kind of synthesis that, the wrong things are getting picked. But yeah, it doesn't have the same kind of.
But I guess it's the rigor, right? I mean, I think, I don't want to sound too negative. I'm saying it is going to be transformative, and it is going to help us innovate, and it is going to help us understand data, but just, have some rigor around it.
Yeah, okay, Kathleen, just to move us on, I wanted to talk a little bit about insurtechs. Obviously, we've seen a number of the high-profile kind of challenger insurance startups struggle. Especially since listing in the US, a number of the big players. And part of their business model is about innovating in a particular area and saying we can do insurance better than traditional players. And so some of them have suffered for reasons not to do with the technology, but more to do with concentration of their insurance. Or, rampant inflation, as we've discussed, they've suffered like others, right? But do you feel like there's been any quietening effect of those failures or those struggles on innovation in the insurance sector? Because those insurtechs that have gone as challengers to the bigger insurers really have struggled. Do you think that will put off others from innovating? Are there any risks to that?
Go ahead.
He said Kathleen.
Oh,
yeah,
you wanted me,
yeah.
okay.
Unless you don't have a strong view,
I don't
which case
you said Kathleen. So.
Yeah, I think again, I think the innovator's dilemma. So again, the reason why I thought insurance companies, large established players, were going to get disrupted is because they did really struggle with transformation and change. And back then their system architecture was very different, and a lot of that has moved in a better direction. And I think now AI for big established players who do have the data. To me, the data is really the king, right? And now AI is going to enable these big players, rightly or wrongly, or good or bad, to be able to really dig into those insights quicker, more efficiently, without a lot more people. So I think it's going to enable the big data sets, where the big data sets live, to maybe have an advantage. What I think insurtechs have done, which is fantastic, has shown big established players what is possible. And so they have adopted some of that. They've either bought some of those insurtechs or, adopted their technology or software, whatever it was. So I think we're sort of now seeing a bit of a level set around what these big players are now going to be able to do going forward. And maybe that does reduce insurtechs, new insurtechs sort of coming into the market. I don't know.
Yeah. No, the full stack, the phrase full stack insurtech of you're not just trying to solve a specific problem, you're trying to be a complete solution. I'm going to very, very decidedly stay away from any names as examples in this conversation. Those are just tough because it goes back to what I said a few moments ago, which is you may have the best app in the world to buy insurance. Nobody wants to wake up and buy insurance. So you're fighting that hill the whole way. What they have done really well, and to build on what you said, is they've done certain segments of the process really well, way better than we have done as an industry. And I think you see a lot of both the insurtechs focusing narrower on that problem, or larger companies picking up that solution and saying, hey, that's really interesting. I want to ingest that claim faster. Or I want to get that customer to be able to talk to somebody sooner.
Just to add there, I think what we saw was they were accepted within the market because they were able to volumize their business. The problem was pairing the tech with then the insurance decision-making process, i.e. performance. Yeah. So that was it. So the first to go, it's always tough. But it did give us some inference, certainly, of where things could go.
It's difficult to make a judgment about whether the technology actually helped them underwrite better, because obviously the loss ratios were out of control, right? So it was hard to make any judgments. Do you think there's still, technologies that have been brought forward through these groups that are going to have a lasting impact?
Possibly. I think what we did see was the efficiency, right? Because of their growth was so significant, so quick, which is very difficult, when you're doing a traditional operation. Getting people in, etc., takes time. So I think from that perspective, what is the lasting impact is that we all talk about it, or we did all talk about it when it happened, which meant that we had to reassess our technology vision and where we were going. It wasn't enough to say, we've moved off of Microsoft products to get sort of our reporting done or how we were making our decisions. It made us think ahead. And so there is definitely elements of that, thinking, the cloud is the obvious, right? But having those things that are online and accessible, dynamic reporting capabilities, etc., it pushed us all forward, which will be lasting.
You've all said in different ways data is king, and especially in this kind of specialty space, which is obviously unarguable. What's interesting to me is that now you've got a kind of proliferation of platforms of sharing that data, and brokers bring forward their technology solutions, carriers have their, and you also have industry groups that are bringing forward, this is the way to share data between people buying commercial insurance and carriers through brokers. And do you think we're in a kind of battle of the platforms now? Like they can't all, because I'm not sure a lot of companies don't want to put their data into multiple platforms all the time, is like in terms of cutting down the time for them. Where do you think, is it going to be that one particular platform will come to the fore? What's your kind of working hypothesis? Maybe, yes, Steve?
It depends on which ecosystem you're performing in. So if you're in a Lloyd's environment, there would be an argument, because that is sort of a closed loop, right? That one will win out when it's more of the open market. The suggestion would be that you've got, as an insurer, have to make sure that you're open to receiving that data, i.e. the universal API capabilities to ingest it and take it in. I think that's the real big change we're going to see, is sort of being able to normalize all of these different data sources, as opposed to it being on all antiquated legacy systems, etc. We actually try and put this in a situation.
Are we to that kind of open insurance model? Obviously, banking's kind of further ahead.
I think many have it today, to be honest with you. We certainly do, and I'm sure others on the panel do as well, in terms of the broker connectivity with the data and the submissions coming in, and each will be slightly different in the mechanics of it, but the fact that we create on a universal API basis means that we can receive it. So I think it's
Excel spreadsheets being sent, email back and forth.
That would hurt my heart a little bit. I love it. I grew up on that. But yeah, does that go away? Does email go away? I think that's getting a little bit too far for now. But it has to at some point, because we are all connected.
Yeah, don't take my email. Yeah,
you have to have a more. Yeah, but to get to where you're going, you have to have a more standardized product. We still get emails with spreadsheets, and then I won't repeat what was said because it's spot on, right? The technology unlocks the ability to not really worry about that anymore. I think that continues though, in the spaces we're in, because unlike banking, there's a certificate of deposit, there's a savings account, there's a lot of standardization. I know brands will be different, but the products are the same. We don't have that. We have that within a customer sometimes, hopefully, on the same business line. But even then, sometimes we don't have the same. Somebody's selling a slightly different product here than they are here in the tower of insurance. So you've got this very bespoke environment, which it does not lend itself to heavy automation in a market like an electronic market trading.
Yeah, so that's
changing, right? So the conversation used to be, we need standardization. Now we're using the technology to just be agnostic to that, right? And we're doing it quickly and efficiently. So I think it's like dynamically changing before our eyes. It's just the computing power, the ability to do all that without asking somebody to send you something standardized. We're just doing it, which is kind of interesting.
Yeah. Can I come back to the InsurTech for one second? Because I happen to think that it's not going to work out so well, but if I wanted to play devil's advocate for a moment, we bought the first cat bond when I was at MidOcean in 1996. And we thought this is going to change the way cat reinsurance works. It wasn't until 2012, and you're probably way better qualified than I am to do this in more detail, but it wasn't until 2012 that it really took off. 16 years. Yeah. InsurTechs have been going, really, 4 or 5. Innovation in insurance takes a very, very long time. There's a human element, right? If the number one asset is people and the number 2 is data, people don't like to change. It's just a human nature. You may be better qualified due to your partner, but it's just real. And so let's see how it plays out. Now I think some of this stuff is, if I sat through one conversation 5 years ago, I sat through 100. Somebody had built whiz-bang technology. Yeah, have you thought about that in the United States, it's 50 different states of regulation? No, we got it. This will take care of all that. Fast forward 6 months, same people are back in. Yeah, could we talk to you about that state regulation thing? Yeah. Because you know what? I can't just turn on the system and start selling insurance. Yeah. I have to actually go and be licensed as an agent in every state in the country if I want to be nationwide. Those barriers may break down, but I don't think they're breaking down anytime soon, because in the end, most people want to talk to someone before they hit buy on insurance.
Kathleen, sorry, you mentioned cat bonds, and obviously there are interesting areas of innovation within there, cyber cat bonds, which we talked about earlier today, but also, investors in those products have taken some losses from some of the other things we've talked about today on the nat cat side. I mean, what are the kind of conditions there for, investor appetite? Is that any hurdle at the moment to innovation, convincing investors to take more insurance-linked securities that they are untested?
I think a lot of the conversation today has been great. I think, the panel around cyber was really interesting. And you could hear, Mike did a fantastic job. I think he should be a professor. But, just the history of innovation. I mean, it is amazing what insurance is, how it's innovated. So I think we've got a long way to go yet. I mean, I think there's tons of opportunity for us around ILS and bringing more capital to the market. Liquidity is still king. How do we get, more liquid products to investors? I think that's even just one little tiny space that there could be some innovation around. So parametric, I'm sure it's been talked about many times today around climate and weather. Yeah. So it's just going to keep coming, and we're going to be able to do it quicker and more efficient, and those things are going to be really exciting. So it will come. There is uncertainty around some of those lines, but I think, again, you heard about how that's going to be dealt with. And then the functional efficiency side around capital markets coming to the risk, that'll continue to innovate, and we're just going to get better and quicker at it. Yeah.
And obviously what came up earlier in Rob's interview with the Premier were kind of conditions for innovation here in Bermuda. I'd love to get some thoughts on that. Obviously, tighter tax and regulatory regime in the offing. Global regulators look at Bermuda and say, as they have for a while, but there's some bearing down in terms of concerns about Bermuda being a more lightly capitalised and more lightly taxed region. Some insurance sector, some other countries would like to take back some of that business, perhaps jealousy, but also some concerns from a prudential regulatory point of view. So I've given you enough of a build-up. I mean, Steve, do you think, what's your feeling? Is this the same old, like the Premier said, the story of Bermuda's demise has been written many times and everyone comes out okay. Would you agree with that, or do you think there's anything that does slightly change the justifications for having a big presence here?
So what I would say is, I've been here 13 years. If I went back over 20, maybe there would be a different discussion, and you could argue it was here to plug some capacity gaps. What Bermuda has done over the last 25 years has to solidify relationships, not only on just that capacity play at the top of towers, but throughout programs. They've also done a phenomenal job as a market, I'm talking about here, to offer new products to the market. And it's been bolstered by decision makers who have had phenomenal talent on this island. I come from the London market, so being at the Lloyd's box and seeing those decisions being made. I worked in the US for a little while as well, where you had several referrals before you get a decision. I come to Bermuda, it's more akin to that approach of being able to make decisions on risk. The client relationships are absolutely critical. That all bolstered by and supported by a regulator who is here to really allow us to trade and to have conversations around upcoming issues, etc. They are stringent, they're robust, and it's Solvency II equivalence, and the requirements are high. But the fact that we're able to have those conversations in person, face to face, with the same people who understand our businesses is absolutely critical for the future of Bermuda. So there is always something out there that's going to impact Bermuda. But as of today, and since I've been here, the Bermuda market has nearly tripled in size on the insurance side. Reinsurance has gone great guns, and we've seen great markets come on the third-party capital side.
Yeah, I just want to draw out, Greg, if I can ask the same question to you in a slightly different way, in drawing on that regulatory point. When I speak to senior people in London, they say the difference is that regulators in the UK kind of, I'll decide how judiciously to translate this, kind of, might start from the standpoint of that you're going to do something wrong and I'm trying to try and work out what it is, and that regulators in Bermuda don't have that kind of cynical view when you first interact, and that kind of colours the whole relationship. Do you think even though regulators say in the UK, but in other markets, the US, they're trying to become a little bit more competitive and quicker to try and catch up with Bermuda, which is so good at signing off things and accommodative, do you think they won't be able to catch up? Do you think it's a cultural difference, or
I'm going to answer the first question and a little bit of the second one. So I'll start.
That's whatever you like.
I'll start. The regulation here is robust and appropriate. We set up Vantage in the middle of the pandemic with nothing. We decided we're going to do it from scratch, and we chose Bermuda, where we put the holding company, one of the legal entities. From funding to license was about 8 to 9 weeks, give or take, and that was in the middle of a pandemic where you couldn't see anybody, you couldn't go anywhere. It took us 12 months in the U.S. to do the same thing in terms of buying 2 legal entities there and getting them up and running and going. So, I'm not gonna, and that's just the reality of the system, and you've got to play through it, and we believe in both systems. But the regulation here is robust and appropriate. The second thing that makes this a great place to innovate is talent. There aren't many other places in the world where you speak to 7th, 8th, 9th graders. I lived here for 16 years. I had 7th, 8th, 9th graders, and they know what insurance is, and they know mom or dad or aunt or uncle or whatever work in the industry, and they grow up wanting to be in insurance. That's not most of us in this, certainly not me, in this business. So the talent pool here is fantastic, deep and well versed in insurance. And then, for me, the third piece of Bermuda is you're part of a global ecosystem. It isn't just Bermuda. It's the fact that most of the companies that work here are active in London, are active in the United States. And it's not that one trumps the other. You need that kind of synthesis of information and approach that makes it really interesting. And Bermuda is, after a long history, part of that as an equal footing as everybody else. And so you're not, when I came down here, people were like, why are you going to Bermuda? It's just an island for vacation. That was 1995. It's not like that at all. This is a business center, true and proper, and can hold its own with London and the US any day of the week.
Brilliant. Annabelle, are you around? Have we got any questions for this final session? No? Yes. Well, please.
On Bermuda and the regulation, I think we talk about innovation and building an innovative culture. The fact that we have a sandbox, which is basically innovation culture, right? You're going to work with the BMA, you're going to try some things out, we're going to collaborate and do that together. If it doesn't work, great, but we have a framework to do that.
But like Lloyd's has a sandbox, but then if you want to bring some of those new ideas to the market in the UK or in, like you say, it's that kind of pace of authorizations, right. It's the pace of getting the regulatory sign-offs and convincing them that it's...
But that's the culture, right? It is an actual culture.
Yeah. But make no mistake, that's the beauty of why you have all three, because we are decidedly going to sell insurance in the United States of America, and we're going to do it in a regulated, appropriate, and compliant way. It just means that we can go faster here, get it going, and export it, and get it going in the U.S. Just takes a little bit longer, that's all. I can't speak to the UK as well, because we don't operate there yet.
No, I guess... Just thinking about innovation, we've spoken about AI, product as well. It comes down to what the client needs, and I think the fact that we're meeting with our clients once, maybe at least twice a year, in person, hearing what they need. Asking that simple question, I think, has been significantly important, disproportionately in Bermuda, because of those relationships we have. And I don't think we should underestimate how important that is. Yeah, 100%.
There we go, perfect. Back to the people business. And speaking of people, thank you everyone for joining us. And I think I'm going to welcome up Arthur and Rob to the stage. But I'd like to first thank my panelists for a really engaging, interesting discussion and innovation. Thank you very much.
Thank you. Good.
Thank you very much. Hey.
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 What did we learn today, Arthur?
Well, there's some things we confirmed, there's some things we probably learned. Things we confirmed, that this is a substantive, a very important part of the global reinsurance ecosystem. 30% of global catastrophe claims are paid out of Bermuda. Over 30% of the premium is written from Bermuda. This is substantive. It's equally a well-regulated environment. That's something we've confirmed. It's an environment where we have lots of incredible talent. The demographics of that talent could be deployed, I think, better. And we had a great conversation, I felt, around inclusion, diversity, the role that we all have to play, particularly using data and aspirational targets to drive change, particularly through the C-suite levels. I think it's always fascinating to learn about what we're doing on the climate side. We had the panel led by George, and just not just the societal importance of what we do here in Bermuda with respect to getting people back up and running when they face real adversity, but it's the actual consideration of people living and working on this tiny little island in the middle of the Atlantic and being thoughtful about crop farmers in sub-Saharan Africa and how we can deploy innovation in order to make their lives better. I think all of these things cement the importance and the role that we have to play. Insurance, by definition, I think, if you ask any graduate, is a bit dreary and a bit boring. But ultimately, if you describe that sort of purposeful, value-driven element of reinsurance and insurance, it's much more exciting, much more attractive. And I think we have to do a better job around kind of that talent deployment.
Rob, I thought your interview with the Premier was really interesting. We was talking about the cost of living pressures, right? Yeah. So, away from discussion of regulation and tax, it was much more, how do we create a better environment for people to actually want to live here and stay here longer?
Yeah, he's not living in fear of global minimum tax.
No.
This is part of the environment, and I thought his message was, we're confident we can handle changes in the environment. It's not our first rodeo. I don't know that we have rodeos here in Bermuda.
What's the equivalent?
It's
shout out.
You're not allowed to talk about that.
Horse riding on the beach. I think the equivalent is horse riding on the beach, which I saw on the Travel Channel yesterday. It's a bit of a feature.
I learned, I was in my panel on cyber, I was impressed by the agreement of that group. One, it's going to be a big line of business. It's big now, it's going to be a lot bigger. But that the government is going to play a role there because the unknown risks are so big that I thought it was interesting how Michael put it. It's not that I think it was Michael, it's not that the government has to be there, but they have to be there to create confidence. They don't actually have to buy the risk, right? Or have the risk, but they have to signal their presence.
It was really interesting. Your panel started with a discussion of how, in the panelists' view, the worst case scenario for cyber had been completely overplayed. I reported the Lloyd's of London scenario, which some people felt was just like throwing everything but the kitchen sink in and coming up with a very big number for losses. It started with a lot of nuance and interesting points pushing back against that, and yet ended still with the need for a federal backstop.
I hope other people notice that literally during that panel, a cyber attack on the
Yeah.
Commercial Industrial Bank of China became the splash on the FT website.
Affecting trading in the world's biggest market for investments.
treasuries.
Yes, US treasuries.
Yeah.
So,
it's
yeah.
a nice case
I was
in
thinking,
point.
could I get that through the app to you, that bit of news? But yeah, no, that's absolutely fundamental. The other interesting thing that we had today was obviously the kind of ding-dong around reinsurance prices, which is so interesting, right? Eric made some strong remarks at Aon about how he would like to advocate for his clients going into January 1. You've had your fun, reinsurers are making a lot of money, and then we had some really kind of nuanced, interesting views back from reinsurers around, this isn't just a kind of one-and-done correction. That, for me, and for all of us, looking ahead into next year, and the audience poll saying, that hard market, we're not supposed to say hard market, but it will continue into 2025, yes. Being the base case for a lot of you, is really interesting. It shows that those pressures that, we've been writing about, the end effects of those pressures will be households being able to afford insurance. You're predicting that those pressures are going to be sustained into 2025, which is, significant. Motor insurance prices in the UK, to take it to a very basic level, already at an all-time high. So we have areas where insurance prices are already as expensive as they have been for households and businesses, and lots of things being kind of taken out. So I thought that was such an interesting format of the debate.
I think that there's two sides to that coin, because I agree with you. It's fascinating. On one level, any business to be sustainable has to be profitable, and part of that income statement is the top line. So you need rate, but at the same time, if that business is not as efficient as it could be, there's another way of grabbing margin there too. So, and that drives efficiency back to their clients. And I think both have to be solved. There's a lot of technology enablement. The whole kind of life cycle of how risks are underwritten and taken through to investors can be disintermediated, as we've talked about many times before. So there's lots more to solve there. It's not just about rate. It's not just about operational efficiency. It's a combination of the two.
It was interesting that kind of systemic risk kept coming up. In your debate, when Christian was talking about how a federal backstop can even distort the true price of the risk, right? That's going to be an interesting debate that we're already having about cyber and whether there needs to be. But that same can be said across the other areas where we already have public-private partnerships, as mentioned.
The flip side of the cyber point was what the message out of Aon, which is like, careful what you hand the government. They're not good at once you partner with a piece of business with the government, that's a hard partner to get rid of historically.
Yeah. So that's going to be really interesting to see that dividing line between the public and private sector and how that moves even in bigger markets.
Good. Well, certainly on behalf of my partners and colleagues at PwC, I want to thank you both and to the wider organisation that you represent. It's always great to have your independent perspectives to drive some of the conversations that we're having. It really helps us achieve our broader mission to push the thoughts and ideas along. I want to obviously acknowledge and thank very deeply my PwC team, Marina, Annabelle, Jane, and all the other PwC people who've co-opted to help put this event on. It's not a straightforward process to do something like this, but I, for one, am proud of what we achieve year after year, and certainly this year, I think the content was excellent. So thank you for that. I'd like to thank our speakers. I think you did a brilliant job. You all offered a lot of diversity in thinking. You certainly weren't prepared to just accept each other's points of view. You wanted some robust debate and challenge, and again, that's super powerful. And most importantly, I would say I really want to thank you all. We can't do these events without your support. The fact that you've almost 300 of you have decided to come and participate, listen, network, engage, tells us that we've got something that you want to listen to, participate, and engage with. And so thank you. Feedback is massively important, so we can continue to refine this and make it something that you'll continue to be interested in. So we'll offer you that opportunity to have that feedback. Please do share it. I know that we failed to deliver some vegan options and some food options at lunchtime, so that's an administrative point, but an important one. But anything from content to location to timing, all of that sort of stuff is awesome. We can't control the weather, but today the weather gods were looking on us favorably. And so with that, I'd really like you to encourage to stay behind. There are dark and stormies outside. Please have a natter, and thank you very much again.